Hello, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session, Market Outlook. Starting as usual with the North American markets, the Dow Jones yesterday was pretty much sideways. The Nasdaq, though, moved almost 30 points down. The Dixie Index is down to 96.60 from 97.40, which was a good sign for traders. Initial jobless claims, 5,000 weaker than expected. Factory orders month on month, 0.1% weaker than expected. Yesterday, the currency movement was 120 pips versus the Swissie and versus the Japanese yen, 135 pips down. The dollar came under renewed pressure yesterday, building on Wednesday's rout on the same concerns about the strength of the U.S. economy and fading expectations that the Fed will deliver more interest rate increases this year. U.S. non-farm payrolls data today will likely set near-term direction as investors parse the figures for clues to the Fed's next move. Today, NFP unemployment rate, also in Canada, net change in unemployment in Canada as well. We also have some data for the average hourly earnings, labor force participation rate, trade balance as well, consumer credit change, and that's going to be pretty much it. All eyes on the North American markets today. Shifting focus to the European markets, the DAX and the CAC down yesterday, 170 points for the DAX. Euro USD 100 pips up, 80 pips up for the pound versus the euro, and 90 pips for the loonie. Today, German factory orders and the French trade balance is due. For next week, we're waiting for the Centix investor confidence on Monday. Tuesday, Swiss unemployment rate and Germany industrial orders. On Wednesday, the European Commission releases the economic growth forecast. This is an event which we will very closely watch. By the end of the week, European and German gross domestic product. Moving to the UK markets, yesterday the FTSE 100 gained 7 points, closed at 59.03. 10-year gilt yields fell by 0.04%. Yesterday, we had interest rate decision from the Bank of England, asset purchase facility as well, and also the MPC interest rate vote, which was, of course, 9 versus 0. Halifax house price index, 9.7%. 212 pips versus the yen, down yesterday. We also had the pound versus the Aussie, 130 pips down yesterday, and versus the Kiwi, 264 pips down yesterday, 340 pips range going sideways today, versus the Swissie, 185 pips down from 250 range. Today, we will be expecting the speech from Mr. Mark Carney. Moving to the Asian Pacific front, yesterday the Nikkei 225, 211 pips down. Foreign reserves report came yesterday, 1.248 billion down, up, from the previous reading. Also, we had the coincident index, which is again a little bit down. Leading economic index for today, and also a little bit of a fundamental news. Asian stocks fell with the regional benchmark index heading for a weekly loss after the Japanese shares declined as the strengthening yen pressured the major exporters. Also, cheap crude is a double-edged sword for one of the world's biggest markets. China's output in 2016 will decline between 3% and 5% from last year's record, 4.3 million barrels a day, according to analysts from Nomura Holdings and also Sanford and Bernstein company. That would be the first decline in 7 years and the biggest drop in the records going back to 1990. The country's in the world's fifth largest producer and the biggest consumer after the United States. The Chinese yuan rose against the US dollar today after another stronger fixing from the People's Bank of China. The yuan less traded at 6.5690 against the US unit compared with Thursday's official close price of 6.577. The PBOC set the yuan central party to the month's high. Now, share prices declined, but trading was light because many investors have left for the week-long Chinese New Year holiday next week. The benchmark, which is the Shanghai Composite Index, was last down 0.44%. Hong Kong's Hang Seng Index is up 0.45%. On the Pacific front, the AUD performance of construction index 46.3, lower than the previous NDS expected of 46.8. Retail sales 0% down from expected 0.4 and previous 0.5. There was a monetary policy statement yesterday, slight to no change in the statement from November. The forecasts for the economic growth are kept at 2-3%. Inflation target also remains within the same limits, 2-3%. The RBI stated that China still remains a major and the key uncertainty for the Aussie economy. Domestic-wise, the non-mining investment is still subdued for the liking of the RBA. The only major difference between the November statement and this one is the good employment data from the latter. As such figures were not apparent before. The bottom line, as confirmed from the earlier this week, low inflation will induce the RBA for further cuts later this year. On the commodities front, the S&P 500 index had a range of 32 points yesterday, closed at 1910. Natural gas storage change report fell by 152 billion British terminal units compared to expectations for a decline of 158 billion. Gold had a range of $18, trading at $11.54. Silver had a range of 30 cents. The WTI had $2.20 change at 31.60 now. Natural gas is trading at 2.05 at the moment, range of the regular 0.8 cents a day. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.